All right, welcome back to Robinhood's Stock Market Watchlist group. My name is Carlos, and today is Sunday, April 30th. This is our live stock market meeting that we always enjoy doing, our due diligence throughout the weekend, so that way we can always plan ahead to kind of foresee what the week is going to be like, anticipating what day, if it's going to be like more bullish or bearish. It's always important to know what's going to happen before it happens. As a lot of us pro traders always say, it's important to always plan our trades and trade our plan. As well as Benjamin Franklin once said that if you fail to plan, you're planning to fail. So one of the key important things that we always need to start with are those that would provide the most volatility. And certain events that provide that are going to be our economic reports. So we're going to pull that up through the investing.com website. And plus, it's also an application. I already have it pulled up, and it looks like it is going to be a very busy week. So we're going to blend in with the economic reports as well as the earning reports, starting with Monday. So looking at these scheduled events, these times are going to be based on Eastern time zone. So looking at the first one on Monday, May 1st, is the ISM manufacturing report for the PMI for the month of April. This event is scheduled to be released 30 minutes after the stock market opens. And typically the first hour and the last hour of every day are the most volatile times of the day because of the activity that it brings. And so this is basically going to provide a lot more volatility on a Monday. And typically there isn't economic reports scheduled for a Monday or a Friday. Occasionally there are, but in this week, there are economic reports scheduled for every day, which is extremely rare. Usually it's 3 days, maybe 4 days at most, but we got 5 days. So it's a busy week, not just for economic reports, but for earning releases. And if you're not sure what these economic reports are, maybe this is new to you, but I highly recommend to always look into this on a daily basis, especially every weekend, to kind of plan ahead. But feel free to click on it. A new tab will appear, and it will provide you a little paragraph of what it is here and how it can affect the stock market down below. Now, most of them are just like this, where a higher than expected reading should be taken as a positive or bullish for the US dollar, which can affect the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar, which affects the stock market. Again, most numbers need to be up, but there's two numbers that need to be down, and that's going to be our crude oil inventory levels and the unemployment report, which is our initial jobless claims. So we'll get to that here in just a little bit, but the more rare that these reports are, the more volatile that it's going to bring for that particular day. And so if it's a weekly report, like the crude oil inventory levels or the unemployment report, it's going to provide a mild amount of volatility, but it will provide volatility. But if it's more of a monthly report, that's going to provide a pretty significant amount of volatility, as well as a quarterly report like we had last week. So this is a monthly report, so it should provide a great amount of volatility, but trying to kind of decipher if it's going to be bullish characteristics or bearish characteristics, though obviously that can be affected by other events like earnings, but for the most part, we always want to kind of compare the forecast with the previous. For example, the previous shows it was 46.3. The forecast shows it's going to be higher, 46.7. As you remember, within that description, if it's a higher than the previous, we should expect more bullish characteristics. So that is what we're seeing for Monday. Monday, it looks like the ISM manufacturing PMI report for the month of April looks like it's going to provide bullish results, which will provide bullish characteristics. So let's blend in our earnings reports for Monday. Now, Monday, I'm gonna pull up the schedule here. We have for Monday morning, right around that time, or right before that economic reports, we have the little SoFi, Norwegian cruise lines, and then the on semi companies. These three are going to be the major ones for Monday morning. And it's going to provide a lot of volatility, and hopefully, and so far with our analysis here, it looks pretty good. These look pretty bullish. For example, on semi, which again is expected to beat their estimates Monday morning, tomorrow morning, May 1st. However, investors are bullish going into the company's earning release with a 41.8% expecting an earnings beat, which is very interesting. How can investors be bullish with a 41.8% expecting an earnings beat? However, option traders are pricing in around an 8% price movement, where it has averaged about 7% in recent quarters. So, but we should expect quite a bit of volatility with this one, as well as other semiconductors like NVIDIA and especially AMD. And then we have the let's see, Norwegian Cruise Line, which is also confirmed to release their earnings tomorrow morning, Monday morning, before the stock market opens. And it is expected that they're going to beat their estimates. Investors are bearish, though, going into the company's earning release, but with almost a 51% expecting an earnings beat. Option traders are pricing in quite a bit of volatility with this one as well, with a price movement anywhere between 8 and 9%, where normally it is averaged right around 4 to 5% in recent quarters. And then there's the SoFi, which is also expected to release their earnings Monday morning before the stock market opens, and they are expected to beat their estimates. Investors are bearish, though, going into the company's earning release, but with a 73% expecting an earnings beat, which also is kind of confusing. Why would investors be bearish going into the company's earning release, but with a 73% expecting an earnings beat? Because maybe they just haven't done enough of their due diligence, which we'll need to look more into the stock options to see, are they buying more calls, or are they buying more puts? Are they betting against them, or are they betting that these things are going to go up? We can find out here shortly. However, option traders are pricing in almost 15% price movement in either direction, where normally it's been a pretty volatile one as well, which has moved right around 12% average in recent quarters. So Monday, it's going to be very, very volatile. Now, Tuesday, we have the May 2nd, we have the JOLTS job openings report for the month of March. So this is another rare report that happens rarely. And so this report is also expected to be released 30 minutes after the stock market opens. Now, the previous report was at 9.9 million, and the forecast looks like it's expected to be less than the previous at 9.6 million. Plus, I have to remind you that Tuesdays and Thursdays are typically our quantitative tightening days. If you're not sure what quantitative tightening is, sometimes it's also mentioned as QT. When you're listening to Bloomberg or Yahoo Finance or other people talk, you'll hear them very quickly. They'll say QT. And it's not a ticker, but it is an event where the government sells stocks that they bought when there was quantitative easing. Now, quantitative easing last happened when the government shut down the economy during the second quarter of 2020. The stock market just plunged, and all of a sudden, the government started buying billions of dollars worth of stocks at dirt cheap. It was unbelievable what these prices were. Now they're selling gradually twice a week, but only for a few more months. Now, this has been going on for all year, but the twice a week, which has provided a lot of bearish characteristics for a long time. We're the second quarter of this year is our transitional season, going from a bearish season to a bullish season. And so we're starting to see more of the bullish characteristics. And so when the government is selling these stocks, we don't see as much of an impact because there's more investors that are putting the money back into the stock market. So, but it's still nice to be able to see what is kind of scheduled to happen before it happens. And we see that the quantitative tightenings typically happen on a Tuesday and a Thursday. Now, this Tuesday, the government is scheduled to sell about $3 billion worth of stocks. Now investors and Wall Street can easily put that money right back into there. But Thursday, May 4th, $15 billion, that's a lot harder to recover. So let's just know as we get more into the schedule here that the government plans to sell a lot to secure their gains. And so, but Tuesday, it's not going to be as potent. But just know that as we get more into the summer here, let's see, I think it's like September or August. Let me see here. Yeah, right around September. That's when we're going to see it once a week, and then it'll be once every couple weeks or once a month until it's just until it's done. And then most likely they'll probably start doing quantitative easing where they're buying stocks. We'll start seeing interest rate easing next year, 2024, where the government will start lowering interest rates. It's just a normal cycle, which we can talk about here in just a little bit. But going back to Tuesday, the economic reports again look bearish, though that can still be affected by the earnings report. But what we do have for earnings on Tuesday is pretty much going to be Uber, Pfizer, and we do have BP that will affect the some oil and whatnot. But Uber, that's going to be the biggest one for Tuesday morning before the stock market opens. Uber is expected to beat their estimates, and option traders are pricing in anywhere between a 9 and a 10% price movement on Uber, which will also affect Lyft. And so, and for those that are trying to avoid, when it comes to stock options, those that are trying to avoid IV crush, which is also called implied volatility crush, we can always go with their competitor, their little cousin or whatever, like Lyft. That way we can avoid the implied volatility crush possibility. And so Uber is going to be a big one. And the next one was Pfizer. Where do I got Pfizer here? Now, the other major company here also going to be releasing their earnings on Tuesday morning before the stock market opens. They are also expected to beat their estimates, while investors are bearish going into the company's earnings release, but with a 44% expecting an earnings beat. And so, overall, it's going to be interesting. Option traders are also pricing in right around 3 and 4% price movement in either direction. Normally, it's moved right around 2 to 3%. So we're expecting a little bit more volatility out of Pfizer, but it's not a big mover. But later on Tuesday, right before close, all eyes are going to be on Ford Motor Company and AMD. Now, Ford Motor Company is expected to beat their estimates, but investors are bearish going into the company's earnings release with a 34, almost a 35% expecting an earnings beats. That is extremely, extremely low, and probably one of the lowest percentage of expecting an earnings beats out of our or out of pretty much everything this week. Ford Motor Company just hasn't really been building as much, and with what they are building, it's not the the high profiting ones. Ford Motor Company profits a lot off of their pickup trucks, but they're building more smaller SUVs and things like that, and so that way they can just maybe build more units and get it out there. And it's a blend of things. And so, but it's just things aren't the same before, when the economy was closed. There's still a shortage, but also there's a lot of industries that enjoy the shortage, because even though their costs of things have gone down, as long as they simulate a short supply with something with a high demand, it just naturally keeps the values up. And the industries like that, because so they're just trying to prevent flooding the market again. And so option traders are pricing in right around a 6% price movement in either direction. Or normally it moves right around that 5 to 6%, but maybe a little bit more extra volatility. And then AMD, where is our AMD? AMD is really going to affect all the semiconductor stocks. AMD, which is expected to release their earnings on Tuesday after the stock market closes, but they are also expected to beat their estimates. Investors are also bullish going into this company's earnings release with almost a 73% expecting an earnings beat. Option traders are pricing in right around 7.5% price movement in either direction, where normally it moves right around 5%. So we're expecting quite a bit of volatility with this. I do see there's some questions in the chat, which I'll take a look here. What's your take on mining stocks? Are they a buy or hold or sell? So mining stocks, that is a great question that I may be able to provide you guys some answers, Christian. Let me upload something that is very, very important. I'm going to upload it to our Learning Center chat room, so that way I can pull it up really quick. But so last year, our government and our Biden administration announced that they want to start mining for like the lithium ion materials around the United States, for electric vehicles and all kinds of battery operated things. And so they decided to invest into 20 different mining companies around the country. And so I just uploaded it to our learning stock room chat room, but I'm going to pull it up right here. Boom, there it is. We have like 19 or 20 different American mining companies right here, and they probably have not reached their full potential yet, but at least these are the names, so that we can save it, screenshot it, whatever you got to do. But like I said, it's uploaded in our learning stocks chat room, that way you can download it for your reference. But I mean, they're all over the place, but it's interesting because these lithium ion needs different types of materials, that way they can put it all together. And so this is where we know where they are within each state, what are the names of the companies that are listed here, and what are the type of the materials that they are doing. And so, but at least we now can invest in those mining stocks that have not yet reached their full potential, because this is all fairly new. The government is implementing slowly deadlines to slowly get out of combustion gas and diesel vehicles. Several years ago, we watched the governor of Hawaii implemented a deadline they said by 2035, all brand new vehicles sold in the state of Hawaii are now required to be all electric. Well, then we watched the governor of California was like, that's a great idea. Let's do that too. And they implemented it and they passed. Well, then another state back east did it, or maybe more. And then I'm in the Seattle region up here in Washington, and our governor was like, "Oh, that is a good idea, but let's do it sooner than everyone else." And so he implemented a deadline by 2030. So Washington State up here, we're going to be the first state where we will be required to sell all electric vehicles. But when we're looking at the fine print on a lot of this stuff, it's pretty much going to be cars and crossover SUVs, not like the heavy duty kind of trucks and SUVs like Expeditions and Lincoln Navigators, Cadillac Escalades, Tahoes, Suburbans. Those they'll still allow to be combustion for a little longer. They just want to try to start implementing this, working their way small and working their way up. And so, but it is inevitable. It's going to happen, and it usually happens as a domino effect. Once one state does it, another one does it, bam, 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 bam. And then once there's a certain amount of states, like 26, 27, whatever, then the whole nation ends up just doing it nationwide. Just like the same thing with recreational cannabis. And so, but just know that, yeah, a lot of these may be baby companies, whatever, but they are going to grow as the demand continues to increase year after year. So hopefully that answers your question, Christian. So, again, Tuesday is going to be a very busy day for the earnings as well as the economic reports. Now, we do have also Starbucks will be releasing their earnings on Tuesday before the stock market closes, or after the stock market closes. We don't have an analysis on that because it didn't reach the top 10. Now, the other economic reports for Wednesday, May 3rd, we have a few. As we have one that is scheduled to be released about an hour and 15 minutes before the stock market opens. So that's going to be about 8:15 a.m. Eastern time. We have the ADP non-farm employment change for the month of April. Now, this is showing that the previous report, which was 145,000, is going to be lower than the previous at 143,000. So right there also shows some bearish results. But then once we get into the 9:45, 15 minutes after the stock market opens, we have the services PMI report for the month of April. So another rare report, which is also forecast to be at 53.7% higher than the previous at 52.6%. So that is going to provide bullish characteristics. So, Wednesday morning before the stock market opens can easily be in the red, and then easily bounce in the green after the stock market opens. And so, but then at 10 o'clock, 30 minutes after the stock market opens, we have the ISM non-manufacturing PMI report for the month of April. Is going to be is forecast to be at 51.8, where the previous was 51.2. So another higher than the previous report, which is good. And so, but then 1 hour after the stock market opens, we have the crude oil inventory levels. Now, this is a weekly report, so it will provide a mild amount of volatility versus these other ones that are monthly will provide a very great amount of volatility. The crude oil inventory levels are expected to be higher than the previous at about 1.5 million barrels versus the previous report, it was -5 million barrels. Now, again, this report is a report where we need the numbers to be lower for it to be bullish. If they're higher, then it will be bearish. And so this report is showing that it is going to be higher than the previous, which should be bearish. So, but it's interesting because we're getting these mixed signals. We got one bearish before open, and then we got a couple bullish after open, and then we got another bearish report 1 hour after the stock market opens. But it's interesting how the government kind of plans these perfectly, because for example, when it comes to this volatility, again, the stock market, you have these really volatile times where it's the first hour of the day and the last hour of the day, which we call power hour. But look at how this is 1 hour after the stock market opens, which normally it would lose its momentum, it would lose its volatility, and then all of a sudden this comes out. So if the stock market may have been green, maybe it'll fall shortly before that as well as after that. And so so that way we can get our timings. We can kind of foresee what the charts are going to look like before it actually happens. I mean, this stuff just happens just like clockwork. And that's why it's extremely important that we always know these times, whether it's going to be bearish or bullish. That way we can kind of, again, plan our trades and trade our plan. And so, but now we have during the afternoon, the federal meetings, which we call the FOMC statement, the federal interest rate hike decision, that is going to be massive. Look at this, you guys. We have a forecast of a 0.25% interest rate hike. And keep in mind, as we've talked about these interest rate hikes before in our previous meetings, we have 6 more interest rate hike decisions before the end of the year, which is absolutely crazy. I'll show you. Here we are. We have 1, 2, 3, 4, 5, 6. So May 3rd, June 14th, July 26th, September 20th, November 1st, and last but not least, December 13th. Now, it doesn't mean that they will make a decision to increase the interest rate. They can easily stay neutral and say, we'll pass, we'll decide on the next meeting. But there's a lot that were just recently scheduled, because they're basically saying the United States economy is very, very strong, and they may need to get a little bit more aggressive, maybe not at the interest rate, but maybe the quantity of the interest rate hikes. And so and so we got 6, which is, I mean, makes you wonder, what if they do 0.25% each one? That would be another 1.5% interest rate hike compared to where we're at now. So we could be potentially at 6.5% by the end of the year. So let me share another thing with you guys regarding our economic cycle. It's something that we talk about every once in a while, but it's very, very important, especially for those that are still learning, like Lance here in our meeting. Lance, this is very, very important. This is our economic and stock market cycle. It is very, very important to know about, because a cycle repeats itself over and over and over again. It will just help you guys learn what's going to happen before it happens in a longer period of time. So, for example, we just recently left the market bottom not that long ago. Just a few months ago. The market hit its bottom, like December, November, January, somewhere around that. But when the market hits its bottom in the green box here, because the market is the red line, the economy is the blue line, but the green box shows what stocks to start focusing on, to start investing on. So the market hits its bottom, that's the time to start buying technology stocks like Apple, Tesla, AMD, Nvidia, those kind of things. Then finance stocks, as long as we're waiting to see their bottom. Finance stocks doesn't really mean to start investing in some of these losing banks, because like the First Republic Bank or the Silicon Valley Bank, these banks that are going under. This time is a time that I call where the finance industry has its sink or swim moment. And so we're going to see these major banks, which are the ones we need to focus on investing in, are ones that are going to be possibly buying some of these smaller banks, merging. I mean, but it only helps them swim, to stay afloat. And so when you look at stocks like Bank of America, JP Morgan, it looks like, they're kind of low. I mean, they're not, that low, but it looks like they're about to take off. And that is the point where we need to start buying these finance stocks, because they've reached their bottom. So it's a matter of finding which ones to start getting into. The technology stocks were the first one. When Tesla reached, $103 to $104, like when Elon Musk bought Twitter and started the Twitter files. Now, when the stock market has been going up for the last couple months, but it's interesting because a lot of people, especially new people, Lance, that believe that the market should follow the recession. And that's not true, because the investors in Wall Street like to take advantage of things much, much sooner, as well as we should. Because even though the full recession is near, we've been talking about the interest rate hikes and everything, you guys, and that will cause a slowdown in housing sales, automotive sales, and all kinds of other issues that will create a full recession. And so even though that is near, the early recovery is right around the corner. As we talked about what 2024 will be like, where there's no more quantitative tightening. We should see quantitative easing, if not quantitative or interest rate easing. And so that is where the early recovery part comes in. So this is going to be kind of like the 2024 right here. And so right now we're in the crossover. We're up here, the market's up. Full recession hasn't fully peaked yet, but we have a lot more to go. So once the market does reach its full-on bull market, we still want to start investing in the technology stocks, but now focusing on some industrials and basic materials. Now, when the market does reach its peak, that's when we want to sell the technology stocks, finance stocks, because those guys are about to go down. But what's about to go up is energy stocks. That's going to be like oil, like BP or Exxon, that kind of stuff. But also basic materials can be like gold, silver, that type of materials. And so that way, when those have reached their bottom versus the finance stocks and technology stocks have reached their peak, we get out of those and get into these. And that way, that is the best way to maximize your long-term investment, which you can potentially double your long-term investment every year by doing this cycle. And you're not the only ones now that know about this. This is stuff that the elite investors, the politicians, they never talk about this stuff because they just don't want the average Joe to know about this. But it is their Bible that they that they must to ensure that this cycle will repeat itself. And the market has about a yearly cycle, maybe every 2 years, where it repeats itself. The economy, the economic cycle, is like every 10 years. And so they ensure that we always have a recession every 10 years for financial gains. And so as long as we are aware of this, we can take advantage of this for ourselves as well. I mean, this is a great buying opportunity. We just do not want to hold things we shouldn't be holding, so that way we're always gaining from it. So this is very, very important. I got a lot of cycle images. This is probably one of the best user-friendly images that I have available, that has been uploaded to our learning stock room in our group. And so hopefully that bit of information helps give you a little bit more insight of what to do. Looking at some of your other questions in the chat room. Yes, thank you. Same question, but this time in relation to mining, exploration, and or royalty companies. I'm not sure. Do you think First Republic will go into well, see, it'll be interesting for the First Republic because the government said something about maybe doing a takeover. But then we have, I think, J.P. Morgan Chase maybe wanting to buy it. So maybe that's all just part of the plan. But it'll be interesting to see what will kind of take place, what will happen with that stock, because this news just came out after the stock market closed on Friday. So whatever it does pre-market, if it starts to surge straight up Monday, this thing is going to fly and take off. Because, well, then again, we just don't know exactly what they're going to do. So we'll have to do a little bit more due diligence to see, but that stock has a lot of recovery to do. I mean, it was just what, $140, $150 what, a month ago. Now it touched $3 the other day. So like I said, it's got a lot of recovery to go. To your point regarding commodities, would you be long paper, gold, silver? Gold, paper, gold, silver, all that stuff's very, very high right now. So we want it to come down a little bit first before we do get more into it. So and again, gold, silver, that's stuff we want to get into during the fall season. When things have kind of reached their bottom. So, but again, technology, finance stocks are the ones that we've been kind of focusing on in the last couple months, and it's the ones we'll be focusing on for the next several more months. So let's take a look at Wednesday. We looked at Monday, we looked at Tuesday. So Wednesday, again, the interest rate hike decision is going to create a lot of volatility during that day. And it just kind of depends on, what the market decides. It could be bullish, it could be bearish, it could be either way. So there's really a 50-50 percent chance that it'll go one over the other, but it will definitely create volatility, absolutely, for sure, right at that time. Most likely what we'll see is we'll see most stocks will take a nosedive for like 5, 10, 15 minutes, and then it'll begin to gradually recover right before close, as things kind of calm down and settle. There's not going to be a panic. This is just kind of a small, unless they unless it's higher than the forecast. If it's 0.5, I mean, a 0.5%, then I think then we're going backwards. So the market will feel like, okay, this is what the government's doing hasn't been good enough, that they got a lot more work to do. We're going to see a lot more aggressive interest rate hikes. If we have a 0.5% interest rate hike now, we could easily have another one during here in another month or two. If they stay neutral, then we could be really bullish because now maybe we're starting to see some progress, and we're not going to see as many interest rate hikes. But even with this, like I said, if we're, and it's usually been spot on. Like I said, we'll see a little bit of some volatility, but it should recover, and everything should be fine because investors anticipated this. So so again, to be determined. There's really 3 different scenarios that's going to happen, and but most likely the main scenarios is what's really going to happen. Again, we'll see a little dive, and then it'll recover and go back to where it left off, and so, but that could provide great buying opportunities. So we have to be aware of what's going to happen before it happens. So but Wednesday, there are some earnings. I don't have any earnings analysis for any of the earnings for Wednesday, but just kind of show you what is scheduled for Wednesday morning for earnings is the CVS Health, and the big one is really going to be the Qualcomm. they're a technology company, and so but yeah, they're going to be a major one for Wednesday before close. So we'll kind of have to see some options activity on its calls and puts. Now Thursday, it looks like we just have so Thursday, May 4th, looks like we just have the initial jobless claims report for the economic report. So this is our unemployment report, which is scheduled to be released 1 hour before the stock market opens at 8:30 a.m. The forecast is expected to be higher than the previous. And again, this is a report where we need the numbers to be down for it to be bullish. In this situation, it's expected to be up. So unemployment is expected to be higher than the previous, where the previous was 230,000. Our current forecast for this week is expected to be about 240,000. So we are expecting bearish characteristics out of this guy, as well as the quantitative tightening, which can happen at any time on Tuesday and Thursdays. Now, the government can execute quantitative tightening during pre-market. They can execute it anytime during the day, or they can execute it in the last second during after hours, making it look like it never even affected that day. But what it does do is it affects the next trading day. But at least, while it tries to recover throughout the pre-market, it kind of softens the blow a little bit, so we don't get that much volatility, because that's quite a bit of money. Where is it here that the government is selling? $15.5 billion worth of stocks. There's Thursday, so this Thursday could easily be very, very, very bearish. And so, but Thursday, after the stock market closes, we do have several major companies that are set to release their earnings report. Apple, that's the biggest one for the entire week. Shopify is another one. Then we'd also have Block, which used to be Square, and then Coinbase, as well as DraftKings and Lyft and Carvana. So Thursday is a busy day for earnings. So, but to take a look at the ones that we do have the analysis for is let's take a look at Apple really quick. Apple, which is right here. Apple again is also expected to beat their estimates. Investors are bullish going into the company's earnings release with almost a 61% expecting an earnings beat. Wish it was a little bit more, but option traders are pricing in right around 4% price movement in any direction. Or normally it moves right around 4%. But also wanted to, also post this picture to remind you that Apple is getting in the car business. Eventually, it's something that they've always talked about, since 2018. But they've slowly but surely kind of trying to figure it out. And it wasn't about several years. It's about 3 years ago, which is when they were really gung-ho about it. And we just have not seen anything yet. Now, typically, when they reveal electric vehicle, we don't see it for a couple of years. And so, but there are some speculations that we could get a reveal in 2025, which means that the vehicle wouldn't be out or available until 2027. Now, I don't believe in that. I believe that this vehicle will be revealed this year for the 2025 model year. So I believe, because that's 2 years from now, so, and I believe that this is going to be a surprise during some of the iPhone reveal events. Now, if you ever watched any of those live, if you remember when Apple revealed the iPhone X, it wasn't about the iPhone X, it was about the iPhone 8. It was the iPhone 8, small, medium, large, iPhone 8 colors, blah, blah, blah. And then it looked like the show was over. But all of a sudden, Tim Cook says, but hold on, you guys, I have a surprise for you. And all of a sudden, this iPhone X came out. We had no idea that he was going to do that. And so I can easily imagine them doing that to this vehicle. They're going to surprise us because there's no leaks. They're very good at this. And so So I'm hoping that we will get a surprise after they reveal the iPhone and the iWatch and this and that, and hoping. But wait, you guys, I was surprised. The first Apple car, or whatever, the Apple SUV, whatever it's going to be, with the latest and greatest technology, wireless charging or whatever. But what happens is when they do that, they'll be able to take online reservations. Now they'll be able to say, now you can go to apple.com and reserve your vehicle for $500 or $100 or whatever. They'll be able to manipulate the investors with those numbers, saying, oh, we have hundreds of thousands of reservations, even though they won't have any built for a couple of years. But it's something that will cause their stock to skyrocket. It is inevitable. It's not a matter of if, but when this is going to happen, whether it be happening revealed this year or 2025, it's going to happen. And so, but this image is, again, just to remind you of the inevitable. Next one is Shopify. Shopify, where is that guy right here? Shopify, which is also scheduled to be released Thursday after the stock market closes. They're also expected to beat their estimates. Investors are bullish going into the company's earnings release, but with a 76% expecting an earnings beat, that is very strong. That is very, very healthy with that, while option traders are pricing in a good old 10% price movement in either direction, where normally it's moved right around 13, almost 14% in recent quarters. So definitely looks good, but again, we'll see some volatility with some of those other ones. I do see maybe some let me double check your the chat room here. You see, to your point regarding commodities, would you be long paper, gold, silver? Well, yeah, I mean, of course, you can always go long on gold and silver. But it's always best when you are going long on something to try to kind of get in and out. There's no reason to be holding long-term stuff when it's going down. It's just going to drive you nuts. It's going to frustrate you. You might as well just get out of that, get into something else, and hold that long, and ride that wave up. Again, you can double your long-term investments every year. That's a 25% gain every quarter with your long-term investments following this cycle. So Friday's schedule is Friday, May 5th, which is also Cinco de Mayo. Don't forget. We have the non-farm payroll for the month of April, and then the unemployment rate for the entire month of April. Now, these are monthly reports, which is going to provide a strong amount of volatility, and it's 1 hour before the stock market opens. So the non-farm payrolls report, looking at this, the forecast shows it's 180,000. Now, the previous report, which was reported at 236,000, so this is indicating bearish characteristics. But the unemployment rate, which is going to be up at 3.6%, is the forecast, even though the previous report was 3.5%. So again, this is the higher. If the number is higher, that's bearish. If it's down, it's bullish. But same thing, with the crude oil inventory levels. But the non-farm payrolls, which is new jobs added, is really dwindling down. As we talked about the recession, we're starting to see it. We're starting to feel it a little bit more and more every month, and this is part of it. And so we even got the GDP report last week, and that was down. That also indicates that we're getting closer to the full recession. And so but again, once we get to the full recession, the early recovery is right around the corner. And that's why we're seeing the market is recovering now, because it wants to take advantage of this now rather than later. It's all inevitable. It's all part of the cycle, And so, but just know that Friday looks bearish. And so, and then going into the earnings report for Friday, the biggest one's going to be the AMC. And so AMC, which is scheduled or is expected to beat their estimates. Investors are bearish going into the company's earnings release with almost a 65% expecting an earnings beat. Option traders are pricing in a lot of volatility with this one, right around 12% price movement in either direction. And so this image someone had posted in our group, but it was a good reminder to let us know kind of what major movies that are scheduled for this year, what major movies were released during the first quarter. Plus, we can also see what major movies that are scheduled to be released during the second quarter. But for the first quarter, we had, the Megan, the Ant-Man, the Cocaine Bear, the Creed, Scream, Shazam, John Wick, Dungeons and Dragons, Evil Dead, or not Evil Dead. That's part of the second quarter. But these 8 right here are the ones that are going to pretty much affect AMC's revenue. But again, investors. I mean, with the earnings estimates, with the numbers and everything, that's where it's expected to be beat. But the investors are still bearish no matter what. But statistically, there's about a 65% chance that they're going to beat their earnings, or 35% chance that they're going to miss their earnings. And 65% is about average. That's normally where it should be. And any more than that, we consider that above average. Any less than that should be considered below average. And so, but it's also really important when we do our due diligence. Investing.com typically release the top 5 things to watch for the week. And so, but it's important, as they have done theirs, we can kind of compare ours with theirs just to make sure that we're not forgetting anything. And so with the Wednesday's Federal Reserve decision is set to be the highlight of the week, with the central bank expected to announce another 0.25% rate hike. A barrage of earnings are also on deck, including results from Apple, the United States jobs report, and central bank meetings in the Eurozone and Australia round out the week. And so, but a lot of this stuff we've already kind of looked into, like the Fed decision on its interest rate hike, the U.S. jobs report, something we've talked about, the earnings, something we went over. But the ECB rate hike, which is going to be the European Central Bank, looks like they're set to do their rate hike on Thursday, where ours was on a Wednesday. So so the European one may kind of trickle into our stock market characteristics a little bit on Thursday, but not as much. So and then 5, we have the Reserve Bank of Australia expected to keep their interest rates on hold. So it looks like they'll be doing their meeting on Tuesday. So it looks like we got that part pretty well covered. And so, but again, it's also important that I remind you, when it comes to these scheduled events, that it's also important to pay attention to the president and the White House's schedule as well, because that will typically affect and provide volatility through our stock market, usually during the middle of the day, or typically it's during power hour, which is normally where they'll have a press conference at the White House, or Joe Biden or our president will say something, and the whole world, all the investors and our whole country is watching in and listening on what they're saying. And they could say something that could spook investors, where they'll cause them to sell, or maybe they say something that'll cause a reaction where people will buy a particular stock. So, for example, if Joe Biden or the White House starts talking about Ford Motor Company building new factories, hiring 4,000 new workers, blah blah blah, and how that's going to help the economy and this and that, all of a sudden people are like, oh, okay, well, the Ford Motor Company, let's start investing, blah blah blah. And so that's why it's really, really important that we always listen in on what's happening. But now the key key areas to look at this when we're looking at the fact-based website on the calendar section is that, like, things like this part here. We see a little green bluish bar here. It says press briefing. That's the White House press conference where we see the press briefing. And usually with those, we have reporters that'll ask questions. And sometimes it may be a question that may result in an answer we don't want to hear. It may because we could, see a lot of volatility, or maybe it will be an answer we do want to hear, which will create a lot of, bullish momentum or characteristics. And we see the time here, and the way that we want to do this is we go to youtube.com 15 minutes before they do the event, and we type in White House live, or if the president is going to say something, which he hasn't really been saying a lot lately, but we want to type in under YouTube Joe Biden live, and then all of a sudden you'll see something maybe pop up on there that's scheduled to take place 15 minutes before that happens. And so, but lately, again, like I said, he just has not been he hasn't really been in public. Now, typically this website updates about every midnight Eastern time or 9 p.m. Pacific time. So with those on the West Coast have a little bit more of an advantage, being able to look at this while they're awake. Most likely they're awake, versus those that are in the Eastern time at midnight. Most likely you're going to be asleep. But when you wake up early in the morning, you definitely want to check on this, because it just adds more events to our plan. So that way we know, are they going to be on there? President delivers remarks, that can easily provide bearish characteristics. The market does not like Joe Biden, doesn't like the Biden administration. So we always know when they start talking to expect a dip. But after about 5, 10, 15 minutes after they start talking, usually if anything bad or significant is going to happen, it's usually going to be within that time frame. And so as long as nothing happens within that time frame, the market will begin to recover and resume where it left off. So that could also provide great buying opportunities. That way we can buy at a dip, and then it starts to recover, and that way we can benefit from it. So very, very important stuff to know about. Now let's take a look at some options activity during Friday, and this is going to be right at close. So we have Tesla, which usually dominates the top of the list of the options activity. Tesla was up to $164.31, up 2.5%. with 2.7 million options volume, but almost about a 50-50 call and put ratio, as investors or traders are straddling Tesla going into Monday throughout the weekend, are not taking any chances. With Amazon up, well, actually down Friday. They were up like $109, almost $110 Thursday, but immediately fell down to about $105, down 4%, but 1.7 million in options volume. But we have 72.5% calls ratio versus 27.5% put ratio, as a lot of investors going into the weekend, into Monday, very, very bullish with Amazon. They're like, nope, 72%, this thing is definitely going to be bullish, at least during opening on Monday. And again, looking at the economic reports and stuff, Monday, as we talked about, looks bullish. So, I mean, it makes sense that, let me get to the page where we were, that these investors and traders are correct. There's a very good chance that that the whole market will be green Monday morning. And so Apple, which is third in place at 1 million in options volume, these investors and traders are going into the weekend with 55% call ratio, mostly because a lot of the Tesla and Apple option traders are typically straddle these. And if you're new to options, don't know options, call basically means you're betting a stock goes up. A put, you're betting against the stock, betting it goes down, and you can profit from it. However, straddling is when you're doing both at the same time. I know straddling, sounds maybe it's conflicting. Why would anyone bet a stock goes up and down at the same time? It is because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So you can gain on both sides. And let me see if I can show you really quick here using Amazon, because Amazon is one of the ones that we like to trade often. Let me see here. Though these, well, Amazon had the earnings, so Amazon had suffered what's called the implied volatility crush. So both sides were definitely greatly crushed, including the puts and the calls. So, but normally it's recommended not to straddle or do options on earnings because of the implied volatility crush. But in other situations, are recommended to straddle or to play options on. But let me see if I can find another one here. Tesla, which may or may not have provided enough volatility. Yeah, just not enough volatility on those ones. Let me see if I can find another one here. There's a First Republic Bank there, which is turned into a penny stock. But NVIDIA, which made fourth place, NVIDIA was up to $227 or up 2%. We got more puts on it. They're up to about 800,000 in options volume, but out of that volume, we have 55% puts and about 44% calls. However, every once in a while, we'll see some unusual activity. Let me refresh this really quick. We need to make sure we're completely refreshed there. Okay. Okay, so I just refreshed it, just make sure that it is completely up to date. And then so First Republic Bank, which made it on the third place in the list, down $3.51. We have it was down 43%, and we have about 68% put ratio, betting that the stock's going to continue to go down, as well as a 31% call ratio. But again, this was before the news that the government was either going to probably take over, or as well as when JP Morgan Chase said that they may just buy the bank. I mean, with this value, I mean, why not? I mean, it was, again, just $150 like a month ago. And so they're buying at pennies on the dollar now. And so let's go down. Microsoft, which was up to about $307 a share, there we have about a 55% call ratio, 45% put. Meta for Facebook, which was currently up to about $240. They surged, what was it, Thursday, almost 10-20%. They did very, very well. But people are still bullish. 62% calls, 38% puts. That is this is a good ratio, especially if if a stock is going to go a particular direction, but you just want to keep yourself safe. We can use this as a straddling ratio, a guide, letting us know that maybe we can go more 60% on calls and 40% on puts, just in case if things don't work out. At least we have our bases covered. Now NVIDIA is about 50-50, and then Snap, which is about 40-60 almost. Intel is about 40-60. Google is all the same, 40-60. NVIDIA or AMD is about the same, 40-60. AMC, which is 50-50. And then Sophie, SoFi Technologies, which again, which Mondays mornings earnings, which is going to be happening. They are very, very bullish, with this. It's already up, almost 3%. Then we have Bank of America, which is, $29. It's up, about a little over 1%, which, Bank of America, we've during our stock market meetings, we've seen a lot of like calls at like $35, $36 a Bank of America. And you don't have to utilize the stock options activity for buying calls and puts, but we can also look at it as a way to follow the money. To follow the money can mean a lot of different things, but at least we can kind of see where people are investing their money. And again, as we've talked about the cycle, we talked about technology stocks, finance stocks. Well, Bank of America is one of those finance stocks, and there's probably a lot of potential to gain off of Bank of America than JP Morgan or really anyone else. Because if we go from $30 to $36 a share, you just gain 20%. And I can't recall if they pay a dividend or not, but if they do, at least not only are you holding on to something that's appreciating, but they're going to pay you a dividend every 3 months. So there's a lot of great ways to utilize this highly valuable information for your advantage. So there's a lot of other great bits of information here that we can look into, but also let's take a look at the option volume leaders. This will give us the most active individual calls and puts that took place last Friday. Now, a lot of them are going to be expired that we need to avoid and to ignore. But the next one, which is this one here, which I'm not familiar with this one, INZ or VZ, INVZ. I'm gonna click on it really quick, see exactly what this is. Innovative Technologies, Innovative Technologies, something like that. Yeah, I'm just not familiar with who they are, what they do, but we do see that it is currently at $2.50, but we have a put at a $5 strike price, which is always kind of unusual. Why would investors buy a lot of these? But maybe it's in the money. I mean, look at the open interest is 142,000. We have a 63,000. So we'll have to see what that does for Monday. Does it subtract it from the open interest or does it add to the open interest? So that way we know, were they buying or selling this? If they were buying, that means that these may have been a hedge fund company or somebody with a lot of money that's trying to buy it for a high value dollar. So that way they don't have to buy as many contracts. And so that's why they buy it in the monies. That way they're high rollers. That way they can have the least amount of contracts and have a lot of money into there while still having the volatility. The next one is Tesla, which we have a $165 call strike price. Tesla again, which is $164. This one expires this week on Friday the 5th. Which we have a 57, almost a 58,000 in calls volume, where the open interest was only 14,000. So since this volume exceeds the open interest, this does confirm that it is pure buying activity. So people bought a lot of these Tesla calls before close because they were very bullish for Monday. Now there could easily be a put down here, which there is. There's a $155 put for the same expiration date. So, but they're straddling, but they seem to be more into the calls than they are the puts. The calls are more valuable. There's more of them. There's almost 58,000 in volume versus 40,000. So they're obviously more bullish than they are bearish. Now the next one is this FRC. That's the that First Republic Bank, again, which is currently at $3.51. We have a $1 put strike price. Oh my gosh, you guys, $1. But again, they did not know that this news was going to happen. So it's going to be very interesting to see what happens with the weekend news of the government taking over. That's bearish, I would say. but to be determined. Maybe it's a bad news is a good news a thing, or the JP Morgan buying the company, I would think would be bullish as well. Unless you guys think otherwise, feel free to unmute your mic or chat in the chat room. If you know something I don't, let us know. That way we can share it. But so far, these investors are bearish. So we have, but yeah, that's the only active put that's on this list. There's another one. There was a $4 put strike price, but that one is already expired. But this one, though, $1 put strike price, going for, $20, 23, 25, $20. The volume, which is at 45,000, definitely exceeds the open interest, which was 34,000. So we know that a lot of people were buying this, not just, selling it, they were buying it, holding it throughout the weekend. So again, it's going to be very interesting to see what happens next here. All eyes are definitely going to be on First Republic Bank. But now we have Apple here, which is just a little over $169, but we have a $170 put strike price that expires this Friday, May 5th. We have a lot of volume on this one as well, almost 42,000 in options volume, where the open interest was just a little over 19,000. So it's also showing a lot of pure buying activity. GSAT, which is never usually on this list, GSAT, which is currently at 90 cents a share, we have a $1 call strike price. For those that like penny stocks, this would be a great one to buy at 90 cents a share. If it gets to $1 within the next couple months, July, that's a 10% gain, and there's a lot of people buying this particular calls. We have 41,000 in options volume, where the open interest is only just under 11,000. So some other ones we have a Tesla put, Tesla call, and we also have an Amazon call right here, which is currently active. Amazon, which again is $105. We have a $110 call, as investors are like, nope, Amazon went down, providing us a great buying opportunity. They're betting that Amazon's going to go right back up to $110. By looking at this options volume, we have just a little over 38,000 in options volume on this call, where the open interest was a lot less than that at 13,000. Investors are bullish. As we can see, investors are bullish going into Monday. Now, a trick to this page, if we click on open interest, it'll sort it out, this page by open interest. But if we refresh the page, we'll be able to refresh the entire system by the highest open interest. So this gives us a little bit of a different perspective on more of a short-term and long-term events. So that way we can kind of see where investors are betting their money in that amount of time frame. And so we see quite a bit of AMC here. Now, AMC, which is currently at $5.50, but we see a $4 put, $3 put, another $4 put, $3 put, but we also have a $10 call, I guess, just in case. $4 put, what's $5, $10 put, that's in the money there, and another $10 call. But for the most part, it looks like investors and traders are pretty bearish for AMC, but just in case, they have a couple calls in there, just in case if there's any pump action going on there. But there's a lot of people holding on to it, as there's a lot of open interest on those. But then we have the INVZ that we just saw, $5 put strike price. So investors are very bearish on this one. So we'll have to see what this 63,000 option volume does. Will it accumulate with the open interest, or will it subtract it from the open interest, to be determined going into Monday? And then SoFi, which we have a $5 put, which is currently at $6, but for some reason investors seem to be a little bearish with this one. Very interesting, as we have earnings coming up tomorrow morning. But again, the volume is very, very light. Only just a little over 2,000 open interest, which is right around 100,000. They could be getting out of it. And that's the reason why. But still, people are holding on to it regardless of whatever's going on here. Open interest, again, is the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning people prior from Friday, people bought a lot of this particular put, but not yet have they sold it yet. Though even if 2,300 sold, we still have a lot more. We still have 112,000 people holding on to this put. But for some reason, there's a lot of people that are holding on to put that are very, very bearish with SoFi. And so let's take a look at some other ones other than AMC. We have the little Siri here, which is the Sirius XM satellite radio, which I don't usually see them on the list, but we do have a $5 put strike price with Sirius XM satellite radio, which they're currently at $6.23. But a $5 put that expires next month, June 16th, approximately 48 days from now. But we only had about 2,300 in options volume, but we have a lot of open interest, 114,000. That is a lot. So for some reason, people are very bearish. I was bearish with Sirius XM a long time ago. Because most people use Bluetooth. When you're, especially if you have satellite radio and going through, the the hills and whatnot, it cuts out a lot. So you can use your Bluetooth for Sirius satellite radio to avoid that, but still you're using Bluetooth. And so, but yeah. So the next one, which is Activision, which was recently purchased by Microsoft not that long ago. But for some reason, investors are bearish, and some of us were thinking, so, if Microsoft keeps buying a lot of these companies, Activision, which was not only available to the PC, like Call of Duty, not only was it available to the PC, but also, the Xbox, but it was available to the PlayStation. What if Microsoft cuts off Call of Duty from PlayStation? So now it's going to lose a lot of revenue from those types of customers. And so I'm just not sure if we're there yet. But who knows? I can't imagine Microsoft wanting to lose out on revenue, but it's just they're just monopolizing, it. But why are they bearish? Who knows? Maybe they just haven't produced anything in a while, or maybe it's a good buying opportunity. Maybe they're selling. Maybe there's a new Call of Duty or something coming out pretty soon. Something we'll have to kind of look into, but this expiration date does expire next year in January of 2024. So we're a long ways away from that, but investors are betting that this stock is going to trickle down between now and then. So we need to figure out why that is. Next one is the Palantir Technologies, PLTR. We have a $10 call strike price. Now, Palantir Technologies, which is currently at $7.75 a share, but people are betting it's going to get to $10 next January of 2024. So whether you want to get into options or not, if you buy this as a share and it gets from almost $8 to $10, you're gaining like 25% in a very short period of time. That is looking pretty attractive there, unless they're selling it. But we'll have to kind of see what the open interest does tomorrow. We do have an Apple put, but this could be, selling activity. We'll kind of have to take a look at this because Apple is very, very bullish right now. And so there's a couple puts here, 150, there's 165, and a $140 put strike price. But we'll have to kind of take a look and see, are these accumulating open interest, or are they coming down from the open interest? Other than that, anybody have any questions? You guys pretty good? Ready for the week? One of you guys in the chat room says if JP Morgan or Bank of America doesn't end up buying First Republic and the government does a backup, then how much of the market correction do you predict in a particular to the S&P? 10, 15, 20%? Well, having a market correction during this time of year is would be very, very difficult because of how much bullish characteristics that there are during this time. During the second quarter is a transitional season that I call, where we see where the market's leaving the bear season and headed for the bull season. And so that transition can happen anytime during the second quarter, or it can happen gradually, or it can happen very, very quickly. Though as we go into the third quarter, that is the full-on bull season, which could also trigger the bull market because how high a lot of stocks will be. So we could see something that would be more or less bad news is good news type of effect, where they'll investors in Wall Street or politicians will persuade things or manipulate things. That way, it's not really as bad. So I really don't foresee a market correction anytime soon, especially if we implement the stock market in the economic cycle. You also mentioned it says you mentioned commodities and specifically referenced energy. What's your thoughts on the uranium market, in particular, like stocks as Cameco or UUU? A lot of those, when we're looking at a lot of those are up pretty high right now, but it takes the next 2 seasons for those to come down, and that's why we'll want to try to avoid those for now, because we don't want to get into the energy or anything energy related while things are very, very high, because if you do, they're just going to come down and you're just going to have to lower your average cost. And when you could have focused on the finance stocks, technology stocks, cyclical stocks, and because those have already reached their bottom. They reached their bottom several months ago. These are the ones to focus on and ride those up, allowing the other ones to come down. And then we'll transition ourselves to getting out of the finance, technology, and cyclical stocks into the basic materials in energy stocks. So hopefully that answers those questions. Any other questions? Are you guys ready to rock and roll?
Yeah, there's one question which people are trying to find out what would happen if the bank, FRC, if another entity bought it, what would happen to the shares? Will they drop to zero, or they'll be exchanged for the shares of the entity that is buying FRC, or the FRC will remain trading on its own as a separate entity? I think I've seen 1 or 2 people ask that kind of question.
Absolutely.
I think it's yeah.
That is always a great question, but it's also kind of to be determined. It really depends. They got to do a lot of things. They have to figure out, because again, the government's trying to get involved, and we have these companies saying, "Hey, I'd like to buy it." So it depends on what they do and what actually happens. Then they have to vote on kind of what to do next. But as a reminder, every company in the stock market has what's called an investors relations page. So if we go, let's say first, Republic Bank, let's go investors relations. It provides us a page where we can go to maybe look at more information about what the company is doing, where they're at with things, and sometimes they may have like a little newsletter thing too. See all the events. This is specifically for investors. So here it is, email alerts. Receive automated email alerts about financial information pertaining to First Republic Bank. So, and a lot of like journalists and the news companies do the exact same thing. They go here, they get this. That way they can get that information from them. And that way they can post an article about it and blast it out there. Well, we kind of act like the journalists. We do our due diligence. We try to get the same information trying to get it as much as the same time as the news companies get it, because we don't want to rely on the news companies for quick information. We want to try to get quick information from the source, because the news companies do it too. They're getting their information from the source. Well, we can too. And so, but a lot of investors and traders don't know about this, how every company that's listed in the stock market has what's called an investors relations page. So you just go to Google, type in the company name, followed by investors relations, and boom, all of a sudden that page will pop up for your advantage. So that way we can get updates of things that are happening with the company as they're happening. So hopefully that can kind of, even though I don't quite have the answer we're kind of looking for, because we're still in that to be determined phase, but at least this will help us get more information of what's going to happen as they start voting on it and start implementing certain things. And so but a lot of that's going to take place probably tomorrow and throughout the week. So let's definitely keep our eyes open on that, and share anything you have within our group as well as within our chat room. Anytime you guys have any questions, feel free to message me on Facebook Messenger anytime within the group, or you can do it directly. Thank you guys very much. Let's have a strong week, and stay safe, and let's make a lot of gains.